Hey traders, and welcome to Jackrabbit Trader. My name is Steve, and in this video we're going to do a portfolio review for Saturday, August 17th, 2019. If you're watching this video outside the members area, whether it's on YouTube or Twitter, just know that these videos are released to the public about 30 to 45 days after they're released to members. So if you want to get real-time updates, please make sure to sign up at the link below, www.jackrabbittrader.com/membership. I'll also leave a link in the description box. If you're the first time here, please make sure to subscribe and like the video if you find it helpful. With that said, let's get into the portfolio. So the first thing that we talked about in this weekend's Jackrabbit report was that we're upgrading our portfolio or our market cycles to a slightly bearish stance. And because of the way that we've developed this process, we look at the SPY and how it trades in relation to the 8-day and the 21-day exponential moving averages. Right now, since the 13th of July, we've been below the 21-day, so that puts us in a bearish stance. We want to be taking profits on our positions, not adding any new risk as far as long-term, stock positions, and really trading around the SPY with put and call options. And that's the way we kind of frame our process when we're in these downtrends or pullbacks. And when we start to break back above the 8-day, that's when we have to start to take notice. Is the trend changing? Is the market maybe trying to bottom? And you could see that we've been in the last few days above the 8-day and then quickly back below it. Okay, so when we're in these types of scenarios, we have to look at the market and look at how we want to trade. And really, if you zoom in a little further, okay, and we look at the chart of the SPY, you'll see that there are numerous points where we've found some support, all right, or I'm sorry, resistance, all right, at that 281 area way back in October and November. And now here we are, we're finding some support at those same levels, okay, and you can see that right here with these three wicks on the SPY, 1, 2, and 3. So the 281 to 283 range, in my opinion, is very strong support, all right? And we've kind of traded around that this week, by buying some call options on Thursday, push down into those lows, and we flipped them out on Friday for a little profit. All right, so we want to be buying the support. We're range bound right now, right? We're trading between the 281, 283 on the downside, and maybe like the 293, 295 on the upside. So we're just kind of gyrating between those two levels. And really, we want to go ahead and make sure that, we're buying strength, we're buying support, right? And we're selling resistance. And that's what we've done in the portfolio over the last few weeks. All right, and going taking it one step further, if we look at the weekly chart, all right, you'll see that we're essentially, putting in some pretty strong bottoming tails on the weekly chart. You could see that right here, right down into that same 281, 282 level. All right, you could see how that corresponds back through, through the chart. Again, those same resistance points. All right, and now here we are becoming support. So, a bottoming tail or a hammer type candlestick where we have an exhaustion of sellers and then the buyers pick up. All right, those aren't confirmed until we get a reversal signal, and that reversal signal would be a move back over the 294 area. So we don't have that yet. Again, still trading below the 8 and the 21-day, but because we're above the 8, we upgrade ourselves a little bit. Next step would be, let's see how we handle the 21-day moving average. All right, can we get back up and over that? Then we'll upgrade ourselves a little bit more. Then the question is, can we get an 8 21-day cross where now the 8 is trading back over the 21-day as it did back in the beginning of June. So that's where we're at with the portfolio and the approach we're taking. Again, hasn't changed much over the last few weeks. Still going to look to maybe sell some strength But in these types of situations, again, if we have a profit in a stock, we're not trying to see how far they can run. It's more about managing the risk and seeing, limiting losses, and then we can worry about gains later. So that's where we're at in the market. That was a quick look at the SPY itself. I could tell you, we could sit here and say, well, maybe we break down and then we could come back and test maybe 273. Maybe we break out, we test the highs, right? Until we break out of this range, all right, right here between 295 and 281, we're range bound. And when we break above one, if we break above 295, then yeah, then my guess is we go to the highs. If we break below 281, then yeah, my guess is we go to 273. Okay, but right now it's range bound. We're still below the 21 day. Any further strength, if we can see maybe some weakness, if we get maybe another bounce on Monday or Tuesday, we come into this 21 day, and then maybe we start to see some weakness where we can use that as a reference for a potential stop, then yeah, maybe we'll get back in some puts and see if we can take it lower. But for right now, we're flat the SPY. We have our positions on from the portfolio. And if we go back and look at the members page, you'll see that, because we've been trading this way, yes, our portfolio has pretty much been range bound as well. But if you look at the SPY, especially in the last 2 weeks, we've outperformed, right? We're working higher while the SPY is working lower. And that's the name of the game in these situations. We just want to lose less so that when the conditions are right for putting risk on the table and trading, stock to the upside, that we're back in the game, all right? We don't want to make, 10, 15% and lose 8 or 9, and then make 10, 15% and then lose 8 or 9. All right, that's a hard way to be consistent, and you can see that in the SPY. Big drawdowns, and with us, we're just moving consistently higher. And again, those trades that we made in the SPY this week, all right, I'll highlight them right here. We made 2, if I recall. Let's go down to our alerts. So we closed our E-Trade stock, and then we closed the 287 puts and our O stock. All right, so here's E-Trade. We closed that on the 12th. We closed O on the 12th. Okay, and then we took half of our profits from our 287 puts. We took the other half of the profits from the 287 puts. All right, and then we had those 288 calls on that bounce. So all in all, this week, we made $470. Including that $830 loss in our E-Trade stock. So, for what we're trying to do, and how we've been trading, market portfolios at its highs, markets pulling back. Gotta love that. Up almost 3,000 for the month of August, up almost 15,000 for the year, and going on and on. 40% gain in the portfolio since 2016. So, we're gonna stick with the process and stick with the plan. Obviously, we have a good amount of open losers right now, about $2,600 in open losers. And, we'll see. Do we have to take anything off the table? We're going to look at that now. So let's take a look at that. But, again, if you go in here, you can click on any one of these. You'll see the note that I sent out. And, again, really not doing much besides trading around that SPY ETF. All right. So let's take a look at the portfolio. And the first one up is Adobe. And Adobe, we're showing a $263 loser right now. And again, we had this bounce last week. And this week we came down, tested those lows, bounced again. So right now, Adobe over 283 looks like the level to hold here. We want to see this level hold. It's really the resistance from this breakout or consolidation, right? Breakout came up, and then now we're retesting that. So I would love to see 283 hold here. I think if we get a further breakdown in the market, then obviously we want to go ahead and look to take that off under 270. All right. ADP. Okay, just really trending sideways, not doing much. But again, look at these. This is one of the reasons I love the weekly chart, right? You could see these levels much clearer. All right, we came down, tested 162, closed above. Tested, 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 tested. We're below it, back above, tested, back above. All right, so down $14 in ADP, and really not much to do there until we break 162. AME, all right, trending lower again. If we look at the last few weeks, similar to the market, just sideways. All right, we've tested the highs, tested the lows, tested the highs, tested the lows, and it hasn't really done much. So my line in the sand is still around this 82 level. Until we get a close below that, we'll stay long AME. Comcast, again, last week came back down to the 41 area, bounced. This week maybe made a slightly higher low. Okay, we actually closed a little bit higher than we did last week. All right, so trending in the right direction. 41, still my line in the sand on Comcast. Hilton, all right, has just really been trending lower since maybe a few, what was it, 6 or 7 weeks ago. All right, breakout looked great. Now we're coming back and testing, and you can see we're pretty much right at the breakout level, right around 93. My line in the sand, 87. Let's call it 88. Honeywell, all right, another one that last week we pushed below 164 and closed back above it. This week we pushed below 164, closed back above it. At one point, it looks like we were trading 170. Not sure when that was. That was in the middle of the week. It looks like maybe the 13th. All right, so really, not much going on here, but we are holding the levels that we need to hold around 164. And again, anything under 164 as far as a close comes, then we're out. Raytheon, again, really just going sideways. Line in the sand here, 173. On this trade, we were looking for a break back above the 188 level. All right, you can see where I've identified these 3 arrows, and we were looking for it to work back to 207. Well, market conditions right now aren't really working in that, with that mindset. But for us, we want to stay long as many stocks as we can during these pullbacks. 1, because they haven't hit our stop. 2, it keeps our win rate high. And 3, when the market does turn around, we want to have some risk on the table, and we want to be able to participate in those gains without feeling left out and left behind. All right, so Raytheon, working its way sideways to lower. TSCO, all right, here we go. Last week we had a nice bar. It looked like maybe a low. We could have used that 101. This week came back down, tested that 98 level. All right, which was the support from the consolidation that we got the breakout from. All right, so again, my level is still 98. All right, we haven't closed below 98 yet. When we do, then we will look to exit the position. Just throw a trend line on here. All right, so that, just looking at that trend line, we take that out, we take that out, right? We want to identify 3 points along a trend. 1, 2, and now 3. So maybe is this the low of the move? I don't know. Redraw as a channel. Just curious. I don't usually draw the channels, but it's almost more like a little bit of a rising wedge. Something more along those lines. So, just keep an eye on it. But line in the sand is, again, that 98 level. Last but not least, UMP. Again, similar to Honeywell, we had a push below our support, came right into that 160 level. All right, now we're back over 164. And until we get a close below 164, we're going to stay long that trade. So all the trades that were in our portfolio, we're keeping for this week. We'll see how next week goes. Again, looking at the market, and if we just draw that little range bound box, okay, we're looking at something in here. So until one of these sides breaks, and that would be again the 294 or the 282. All right, until one of those sides breaks, you just have to anticipate we're going to sell risk up here and we're going to buy risk down here. All right, and that's just the way it's going to work. Ultimately, this could just be a continuation pattern where we chop around and we break down again, and they call those ABCs. All right, so it's got to complete that move. So it could very well be that we come from the highs to the lows, back up to the highs, and 100% of that move would be a target. And sure enough, look at where that target lines up. This is one of the reasons that technical analysis is so important, right at that 273 level. And if we go back to that SPY, right, and we look at the daily chart, again, we'll draw that same ABC level, and I already have this 273 drawn in, not for this reason, but right, so we're gonna go from the highs to the lows, back up to the highs, and sure enough, 100%, right? So that to complete that ABC where you have A, B, and then C back down, all right, that's basically what they call a measured move. It lines pretty much up with support. So not predicting anything, just obviously want to be completely aware of potential scenarios. We could, chop around and break back higher. We could chop around, break lower, and just understand that, to complete that pattern, what a lot of technicians are looking at, 273 may be the level. So for us, for right now, again, just going to keep going about our business, and we're just going to keep trying to outperform the market, especially when it's drawing down. And then when the market comes back around, let's get back on the horse and ride it higher, right? So that's where we're at for this week. Hope that helps. Hope you enjoyed it. If you did, please make sure you like this video, subscribe, and hit the notification bell for future video updates. Other than that, have a great weekend. Take care.